Yeah, we have this secular trend that just overwhelms everything else. And I think that will continue for a while. I also think it is worth noting, this is a major series of macro shocks, and Bitcoin is virtually at its all-time high, right?
Yeah.
That was not the case in previous major macro shocks. This is really the first one where we've experienced that. And we all think, I forgot what the title is, Bitcoin going to the moon, or this is like a classic situation where you wouldn't be surprised if Bitcoin would sell off. And we're seeing the opposite. We're seeing strong long-term flows. We're seeing it like poking at its all-time high. So I think the pump alert is on.
Matt opens by highlighting a massively overlooked driver in the current Bitcoin ETF surge: the compounding behavior of early investors. Those who started 2024 with just a 1% Bitcoin allocation via ETFs are now scaling up, moving to 3%, 5%, or even higher as they witness the asset's performance firsthand. This natural progression, combined with an increasing wave of national account approvals, has Matt projecting that ETF flows in 2024 could surpass even the record-breaking levels seen in 2023. It's not just new money, it's conviction compounding.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
And I think it'll be bigger this year. I think we're going to end up with more flows this year than we did last year, because we're getting these national account approvals. And because I said this before, people who buy Bitcoin the first time, that's not the last time they buy Bitcoin. So all the people who bought this ETF last year are going from 1% to 3% or 5% now, right? Because they've learned, they've seen what it's done in their portfolio. So I think the flows are just going to go up. Look, I think this trend is going to continue. I know a lot of people think we're at peak Bitcoin Treasury. I think peak Bitcoin Treasury company is still 3 to 6 months ahead from now. There are a lot of deals coming through the pipeline. For every one you see announced, there are 3 in my inbox talking about their pipe. So
there's going to be hundreds.
They're going to be hundreds. And eventually some of them will trade at discounts to their net asset value. And it'll be interesting to see what happens. But this is a trend that's going to continue. It's going to accelerate in the fall. Look, it's really important for crypto broadly to get our first positive piece of crypto legislation. I don't think we can overlook the degree to which that's important. I do think it's a catalyst for why I'm really optimistic for the second half of the year. And then, obviously, stablecoins are going to be everywhere. I think it's worth investors sort of closing their mind and imagining a world where every investor has a crypto wallet, or every person in America, or every person around the world has a crypto wallet. Because that's the world we're going to live in a couple years, as stablecoins go from 250 billion to 2.5 trillion to 10-20 trillion dollars, which is the direction they're on. And every major firm. And just think about what that world means. That means you're one click adjacent to DeFi. Yeah, exactly. JP Morgan, right? Everyone. Yeah. Hell freezes over. But here we are, inevitable. Everyone's going to be one click away from DeFi. They're going to be one click away from Bitcoin. Crypto is going to be completely normalized. People aren't even going to think about it. Single sign-on with a crypto wallet onto every major shopping and a website is going to be how people interact with the internet. That's the world we're going to be in 2 to 3 years. And what does that mean for the value of these other assets? I think it's extraordinarily bullish for DeFi. I think it's quite bullish for Bitcoin. I think it's bullish for a number of other assets as well. I think it's a really big deal. That's right. Yeah, we have this secular trend that just overwhelms everything else. And I think that will continue for a while. I also think it is worth noting, this is a major series of macro shocks, and Bitcoin is virtually at its all-time high, right? Yeah. That was not the case in previous major macro shocks. This is really the first one where we've experienced that. And we all think, I forgot what the title is, Bitcoin going to the moon or Bitcoin rate.
It's pump alert, Bitcoin about to explode, sir.
Oh, sorry.
I was sleeping and my pump alert went off, so we thought we'd make it off. Never happened to me before.
But I think the reason for that is this is like a classic situation where you wouldn't be surprised if Bitcoin would sell off. And we're seeing the opposite. We're seeing strong long-term flows. We're seeing it like poking at its all-time high. So I think the pump alert is on. The historical precedent for the SEC is there must be a parallel large regulated futures market, right? There was a Bitcoin futures market, so we could get a spot Bitcoin ETF, an ETH futures market, so a spot ETH ETF. The Solana regulated futures market is nascent and small. So if we do get a Solana ETF, I don't think we go all the way down the spectrum, but I do think it opens the door to, relatively broad-based exposure, something more like what we see in Europe, where you can get the top 10 crypto assets in ETFs. Ultimately, I'm not sure people want to buy the 10th largest crypto asset in an ETF. It may be that Solana is sort of like the end of the tail. Maybe there's one or two more. But it does look, it looks promising. And based on the filings we're seeing, that's the indication that people are getting closer to approval. There's no guarantee, but it does look like we're going that way. And I think there'll be a bid. I think people will want Solana ETFs. I think index-based ETFs are going to be a bigger deal, but I think people will be excited about Solana ETFs. I think we'll see a bump there too. I tell this to Ethereum people all the time. Ethereum's a $300 billion startup 10 years into its growth. It's like the most successful startup launch of all time. And Ethereum people are all sad. No, you're doing just fine. Like 300 billion is a lot, right? Like you're doing just fine. You're only 10 years in. If you were a company, you'd be amazed. So we do get an exercise to these numbers.
Matt describes institutional demand for stablecoins as nothing short of insatiable. When he and his team meet with large investors, the response is immediate, like putting candy in front of a child. Platforms like Circle and Tron are attracting massive attention, and Hougan sees it as entirely expected in his view. Stablecoins are the Trojan horse of crypto, a familiar, powerful bridge that makes digital assets accessible to traditional capital, with firms like Morgan Stanley, Wells Fargo, and Stifel beginning to onboard Bitcoin ETFs and publish crypto research. The foundation for a much larger institutional wave is already being laid.
100%. And they're charging, they're charging 5 or 6x the fee that you're seeing on layer twos, and they're holding those margins. Like it is actually a remarkable business story. Yep. Yeah, completely crazy. You're absolutely right. The IPO window is going to explode. The second corollary of that is venture capital is going to explode as well, because all of a sudden my PE comp is not 20, it's 100, right? So the valuation window jumps up. And then with these companies flush with cash are going to do significant M&A. And absolutely, you're going to see all these companies rush. I mean, it is going to be a gold rush for Wall Street. And I think the demand is really significant. For what it's worth, when we go and talk to institutional investors, the story about stablecoins is like, setting candy in front of them. I mean, they can't get enough of it. They all want to invest in it. So I'm not surprised at Circle. I'm not surprised at Tron, even though it makes us, remember we're living in a simulation. But I do think it's going to be, explosive. You're going to see, a dozen companies come to market pretty quickly. Yeah. But this is clearly the path, right? This is the giant leap that gets everyone into the ecosystem. And then all of those other things become infinitely easier once everyone has their crypto wallet integrated with their bank account and their browser, et cetera, which is where we're going to be, right? All of a sudden, all those things are just half a click away, as opposed to like, what is a wallet? What is the seed phrase?
Yeah, it's just going to be your wallet. That's the point, is we'll finally abstract away the crypto and the blockchain and the NFT and the blockchain and all of it. It's just going to work, and that's where you're going to...
it does take a while. It took us 3 years to get to $100 million in assets, and as Scott just showed, we almost did that last week. So, you keep pounding. We have an incredible team out there, and I think these flows will continue, right? I think these markets are just opening up. There really are trillions of dollars that are just starting to allocate, and I think it's going to be a strong second half of the year for us as well. Beautiful to see. We've actually had a lot of wins on the national account level. We've had a number of big platforms that have opened up to us specifically over the last 3 or 4 months. I tweeted this a little while ago, but it felt like every week, like another $5 trillion of assets opened up to Bitcoin ETFs. And a lot of that was to us. So we're starting to see flows from those platforms, from the Morgan Stanleys, from the Wells Fargos, from the Stifels, from the others. And they like us because we provide research about Bitcoin, right? That's why they want a specialist provider. in amongst the mix. For a while, it was just BlackRock and Fidelity, and now we're starting to make our way in there. So it's beautiful to see. Before I was at Bitwise, I was the CEO of ETF.com. I've watched this market for 15 years, and it's so much bigger. I mean, it is astonishing, right? People say things like it's the biggest launch of all time, but the degree to which that's true is crazy. Before these, the biggest launch did $6 billion in inflows in year one.
Was that GLD?
Yes, that was QQQ. GLD was second. QQQ did about 3 billion. So it was 6 and 3, and Bitcoin ETFs did 37. I mean, it was 6x the size. It's absolutely incredible.
Yeah.
So, no, I didn't expect it to be this big. I think that may be it. I think it may be a marketable question. I do think it's more efficient for some of them to gain exposure through the ETF, depending on their size and scale, certainly for the smaller players. We've had conversations with a few folks, and they haven't gone anywhere. I do think it's that marketable question. I wouldn't be surprised.
The maxis would lose their minds. Yeah.
The maxis would lose their minds. They would call it not a real treasury company, right? And scream paper Bitcoin at the top of their lungs, even though it's not true. But these are effectively marketing engines. So maybe that is the reason. Yeah.
To underscore the scale of the ETF boom, Hougan draws on his experience as former CEO of ETF.com. He compares Bitcoin ETF staggering $37 billion in first-year inflows to previous milestones GLD, with $6 billion and QQQ with $3 billion. The Bitcoin ETF rollout wasn't just big, it was historic. But the real impact goes beyond the numbers. These ETFs have slashed access costs, resolved custody complexities, and opened the door for trillions in sideline capital to finally enter the space, and according to Hougan, we're only at the starting line. Asterisk, this is just the beginning. Click here to keep going.